How's it going, everyone? Welcome to the weekly trading review for the week of July 21st. This week, I had 7 closed trades, 2 open trades right now, total profits of $170.70. I had 2 wins and 1 loss on my swings, 2 wins, 1 loss, and a scratch for my day trade. Overall, 4 wins, 2 losses, and 1 scratch overall. So, like always, we're going to go to what's happening with the market this week, what's coming up next week. We'll go into the swings, we'll go into the day trades, and then I'll end with the positions that I have open as of right now. So, market over here, I want to make this a little bit bigger for the time being, just so it is easier to see. Okay. And I'll make this a little smaller. So, market, long-term technical, mildly bullish here after this big drop. As I've been mentioning, we made a new all-time high, and we have continued through that all-time high. Market is now at 637.10, making a lot of new all-time highs this week. On a shorter-term basis, we had a couple of dips early on here. Here in June. We also had one in May where there were some nice entry points after the market had cleared the 50 and the 200. And also through this prior pivot high over here that it came back and later tested. After this strong move up over here, the market kind of compressed for a couple of weeks. We got some dips here, we got some dips here, we got some dips here before actually finally releasing to the upside. We got this little poke through that slingshotted us to the all-time high. And you can see when we poked to the all-time high, we didn't get knocked back hard. Buyers were there to scoop it up, and then that ended up kind of driving the market higher for most of this week. So you can see on this week, we had a little bearish reversal day, a small bullish reversal day, bull trend day, LPTE day, and then another bull trend day. So a lot of bullish days. I'm going to go into the 15-minute chart so we can take a look at what it looked like this week. Market opened up, pushed higher to new all-time high, came back down low, bearish reversal, filled in this gap. We had a selling climax and then a gradual rally, LPTE day, kind of choppy inside day, just above the prior high, but we held that level, which is pretty normal considering, like, if you look at how the markets are moving here, it's in a choppy fashion. So, it'll have like a move down here, it'll rally for a day or two, maybe 3, and then it'll sort of stall out or pull back. So there's actually a lot of small little windows where it's like, all right, we got a dip, find some support, we can take some swing trades for a day or two. We get another dip, take some swing trades, get another dip, take some swing trades, and we can ride it up until the market starts to stall out. So that's just what we've been seeing. These dips end up getting bought up, and then we do push up higher. So those are, I think, the opportunities that I see in terms of timing with these little mini market cycles going along the way. So that's been this week. We had Google earnings and Tesla earnings. Let's take a quick look at these charts. So Google earnings was positive, and then it kind of gave back some of the gains. So overall, didn't really move anywhere post earnings. Tesla had a big drop after earnings, and then it actually moved back higher before getting rejected from the 200-day SMA today. So again, slightly bearish. There's some other major earnings. I think TXN came out. That was bearish. Yeah, IBM came out. That was also a bearish reaction. INTC, bearish reaction as well. So there's some weakness in the semis. I think TSM did pretty decent. If it wants to load. There we go. Gap up, tested that gap, and then bidding up higher. So didn't really change too much, just sort of continuing this normal trend. I know that CMG was pretty weak. Yeah, post-earnings bear as well. So on the tech side, it's been a little bit soft, but the market has been quite resilient. I think semis overall have been decently strong. NVIDIA has been holding up really well. AMD, very nice chart. AVGO, very nice chart. And one thing I like to do to check is I have all these lists in one option of just different specific industries. So if I want to say, hey, how are semis doing right now, I can quickly check, hey, okay, well, how are they doing on, their D1s? What are they looking like today? So I know ASML has been bearish. MU has been bearish. I think ARM has been pretty nice. pull that up. So yeah, ARM has had kind of providing a nice little bid to the market. On has pretty bearish, honestly. I think there was some reaction to some peer earnings as well. Let's look at Microchip. Yeah, also a little bearish. So yeah, semis, there's a couple pockets holding up, but there's also some sectors getting affected by it. So that was kind of the major news this week. But market overall held up really well during all that news. Next week will be a pretty big week. We got some economic releases. I think GDP is coming out. PCE should be coming out as well. I'll have to double check if employment is coming out because it'll be the first Friday of the month, but I believe it is. And we also have a lot of mega cap tech earnings. Meta. Let me actually check real quick. I know Meta, usually what I do. Here's a quick check here. Projected earnings in the next 5 days. All right, and I can even up this if I really want to, just to see what's really coming here. Okay, yeah. So Meta should be in here. I guess that's the big one. I think some of them come in the week after. But we're through all of them, and I know actually in the week after that. Let me open this up to 5 days, to 15 days. We should see. I think Amazon should be coming in here. Amazon, Apple. I'm always forgetting one. Microsoft as well. Should be coming up. So yeah, they may be filtered out from that ATR filter. Yeah, there we go. There we go. That's what I thought. Yeah, my ATR filter was screening them up. Yeah, there we go. Apple, Amazon, Microsoft should be in here. And then Meta. So we're hearing from all that. So again, pretty busy week, which has affected my open swings. I'm keeping it fairly light on the open side. I'm just going to stick to some day trading, see how the news plays out, see how that fares for the market, and if it sets the tone for any sort of bearish seasonality here. Or if the market's just going to hold up and continue to float higher. I think really the best thing that I like on a market here is just a nice little pullback. So if we get a nice dip to the 8 EMA or even a deeper dip to this upward sloping trend line or the 50, I'm okay with that, and I want to see that held, find some support. That allows us to take some more aggressive swings. We can take some put credit spreads if we really like that. You can take some aggressive call debit spreads, or even add to some get in some nice in the money calls on stocks that are holding up, and add to those positions when the market starts to confirm. So that's when you can really get some nice meaty gains. But right now I'm sticking to some shorter term swing trades. I've been trying to bid better and also scale out a little bit into gains. But to me, the name of the game right now is just portfolio management, and I don't want to be caught in a whole bunch of longs. If the market has a deeper pullback or a negative reaction to all of that news, I'd rather keep it a little bit light, have one or two nice positions on that I feel are good trades, a bit agnostic, but I don't feel like I'm out over my skis during all these sort of binary events. All right, so with that being said, let's take a look at the first swing trade that I took, which was Wells Fargo. So here is the chart for Wells Fargo. I took it on July 22nd, and I took the August 1st, 80 calls for $2.65. I took 2 contracts. And I took those calls, I think, one, because it was going to be a pretty short-term trade, and I was looking to target around 84, I think 83 to 84, somewhere along that. And I took 2 contracts so that way I could scale out as the trade progressed. So the setup for this, let's zoom back in time. So first of all, we had this nice move up into earnings. Stock had pulled back, a little bit of negative reaction into earnings, but then the stock found its footing, held this support level. There's a little bit of resistance, looks like around here. Didn't quite even get to the 50, so held some of this support over here and then started to rally up. Now on the 22nd, if you look at what the market did, right? Market had pulled back and was starting to rally off the 8 EMA. Wells Fargo held pretty well during this market move down, and then put in a nice long green candle during this pullback, and it had room to fill in this gap here at the close, which is 83.43. So I had some nice room, and I took this trade. I'm going to go back to the M5 chart. I took this trade actually not as a better bid, which is basically meaning that I wait for the stock to pull back, maybe to VWAP intraday, maybe the next day to get in on a dip. So when I took this chart, I actually took it around over here. I think I got like a mini dip to the 8 EMA, so I got it at around $82, which is 260, 265. And then stock held up pretty well and then rallied and closed near the high of the day. We had a gap up the next day on the market. And on that gap up, I'm going to go to the M5 chart on SPY because it kind of helps. So my thesis on this trade was, all right, well, there is a high minus trend line on Wells Fargo. And if I just draw that here, right? So that was my first area. I was like, all right, I'll take some partial gains here, and I'll see if it can't break through that trend line. If it can, then I'll scale out and maybe take some later gains near this high at around 83.94, 83, around $84 basically. I'll take some gains. So I entered that at $82. I got the gap up. And I took partial gains at $3.50 on the open. So I'm going to go back over here. And I think I just typed in the same chart again. Yep. So right, here's SPY selling off and then slowly grinding up. You can see Wells Fargo did not sell off, found some support, and then was grinding up way before the market did, finding a whole ton of support. Really nice price action. So once it felt comfortable that the market had found some support and was moving up higher, I think around 115 that's when I started bidding for this trade. SPY bid new high of the day. We officially made some higher highs over here and higher lows over here. So I felt comfortable that support was in. And I took the trade over here and then closed in profit for the rest of the day. My plan was that if this stock pulled back to VWAP, I'd maybe add another leg. And then depending on what the stock did tomorrow, I may decide to scale out or add. If it gapped down, right, and it found some support, I may add to the trade. If it gapped up into that resistance, then I might take some profits and see what happened. So gapped up, and I took gains on the open. Like I said, I took half off at $3.50, which was just under $1. That was maybe about a 33% gain on the calls. And then the market started to move in and fill in the gap. And Wells Fargo was holding up pretty well. So my line of the sand was, okay, well, if Wells Fargo actually starts to close in the gap, then I'm going to take profits on the remaining calls. And then that happened on this candle over here. Oops. Come on. Okay. Should use the arrow keys. All right. So it happened here on the 10-20 candle. Started to close back in the gap. Now, the market was holding it pretty well, but at this juncture, I didn't know what I was going to do. So I took the remaining gain on the call at 310 at the 10-20 candle. So decent win overall. Average gain was at 330. So, took some nice wins, but market ended up actually holding this gap and rallying up a lot higher. Wells Fargo eventually found support at the gap and then started rallying up, hit this gap level over here, which was the gap fill, and then it was able to rally up higher as the market did for later in the day. And pretty much hit almost that my profit target right over here around 83.93, right? And that high is 83.94. So would have hit later in the day, and then also would have been a nice winner had I continued holding on for maybe the next day. So I think what I noticed was when I exit my first leg on some of the swings, I sometimes exit a little too quick on the second leg versus giving it a little bit more time to breathe. You can see that I exited an hour later, and oftentimes the stock will pull back and then make another surge higher. So I can evaluate whether I want to do at this relative high, if I want to take some position off, or maybe I want to see if it can break through or not. Obviously, you're not going to get more of the move, but I liked everything about this trade. The only thing I think I would have improved is just trying to stick to it, give it another day on the trade, because a lot of times that extra day, it might poke up a little bit higher, right? And now I can take gains now at 84, or even poke a little bit higher. You see, we got this poke, and then we got a strong flush out later, which tells you that there's some selling. So I can even take some gains on the flush out, but even still at 84, 84.11, somewhere over here, that's still a lot better than where I was taking gains down over here at 82, 70 on the stock price. So yeah, just lean into it a little bit more and give it some space in terms of scaling out. And oftentimes the stock is not just going to pivot super hard, right? It might linger at that high for a day or two. And if I pull up this D1 chart, that's exactly what you'll see. It's still lingering around $84 for a day or two. The market tailwind has been high, so that's been in my favor. But I had a little more time to lean on that. Okay, so next trade that I took is MU. All right, so this is the MU chart. I'm going to just clear some of these lines. They're getting a little bit messy. So MU was a pretty nice bearish chart. It has been leaking lower while the market has been rallying higher. So definitely a lot of relative weakness on this. It is hard, I think, to take shorts while the market is rallying up so much. But you can see that the stock has held up really well this week, right? Opened this week at 113.58, down about $2 while the market is up about $10. So pretty nice stuff on MU. Now it broke through this 50-day SMA on the 22nd, which I really liked. Now, in the efforts of me getting better bids, I figured I'd have a chance to get in closer to the 50-day SMA because if the market's going to be rallying up higher, the stock is probably going to come back and test that bid because we don't have a tailwind. Instead, we have a headwind. But as long as the high of this candle holds, as long as the 8 EMA holds, we should have another test, and then probably another leg lower on the sky. So I was bidding at about 111, and I got filled on July 24th. So I was short 45 shares at $111. The setup was that SPY was still bullish, but if we have any pause or any sort of hit an all-time high, gap up, and start to sell off, I think MU should be able to at least test the low and potentially head a little bit lower. I was leaning on this 50 SMA as support, so it needed to hold that level. Now, I was in MU over here, and I got filled pretty much on the open. Came in around 111. And at my stop somewhere over here, right, you can see it's a little bit higher now, but earlier it was around like maybe 112. This was sort of the break here. So on that day, I got filled, which was the 24th. So let me look back on this chart. Okay, yeah, 24th. So market was kind of LPTE this day. Stock was actually holding up decently well, but it was testing this level, and it broke above this level here at 1055. Again, the 50 SMA is kind of somewhere around here, around 112. It broke through, or sorry, I think it was actually around here, around 111. Yeah, 111, like 60 something. So it was a lot closer than actually what it is right now. But it broke through here at the 1035 candle, came back and tested it, and then rallied higher on a new high of the day. And that's actually where I ended up taking the loss. So I took about $1.16 loss on this just because we had that breakout and retest of this moving average early in the day. And the market was actually rallying up higher and pushing up higher earlier in the day as well. So I took the loss, and obviously it did hold in hindsight. We had a break. We had another test, a higher low, and then it came back in, closing below the SMA yesterday, and then it had that test level. So I had my chance to take, I don't know, maybe $2 on the trade. Yeah, 109. So I had a chance to take a small win on the trade. I think the problem here was that because I took it early in the day, I had a chance of, okay, this could actually break through and just continue upwards versus actually get smacked down and hold that level. So I needed to give it a little bit more breathing space. And again, it's hard for me to feel super confident shorting in the market. So although my better bid was great, I think there's two things that have to change. Either, right, I wait for this to kind of retest the SMA and I watch it intraday, and if it closes below, then I can start to take some shorts here maybe at 112. Or I do the better bid and I have to actually be willing to to see if this actually goes against me through the SMA, maybe test the 8 EMA before making a decision to close it and giving it a little bit of space to breathe. So that was the mistake I made in MU, but overall it was a pretty small loss, about a $50 loss. And I think on some of the trades that I'm winning on the swings, it's, you know, 150 to $200. So they're much smaller relative to my wins, which is good. And the nice thing about the better bid is that I didn't have to worry about what was happening here, right? Instead of chasing this low at maybe 108 or like 109 or something like that, I'm getting in $2 or $3 at a better price, and that way when it comes back down, I can take profits. So I was right in the trade, but you know, I didn't stick with it, and I bailed out a little bit too early. All right. Next trade that I closed was FTNT. So over here on the 8th, I took the July 24th 101 100 PCS for a 21-cent credit. We got definitely some choppy movement, but the stock ended up staying flat. It held its SMAs and AVWAP-E. It also held some horizontal support that was coming in at this $99 level, also some coming in at the $100 level. So I got failed on this test of the 50 SMA on the 8th, which was a pretty crazy test. Stock had a lot of bearish news. I think there was some news on crowd as well, so I think this whole sector was getting hit hard. Held the gains, snapped back in the range. A couple of tests here. We got one test of the 200, another test of the 50 here, but stock ended up pretty flat from when I opened it, and I took the full credit. So that was 5 contracts of for 21 cent each, so that's $105 gain overall on the position. So that was a nice boost this week. The nice thing about the PCSs is that they can turn obviously a very high probability trade. You don't need to get the direction right. You just have the stock. You just have to not really get it horribly wrong, and you'll make money. And I often find on PCSs that obviously you want 20 cents of credit for every dollar of strike price. But if you get a good entry, you can often get something like 21, 22, or even like 25 cents credit. And then instead of having 1 to 4 reward to risk, you're getting 1 to 3 reward to risk. So every penny helps a little bit more, because then it means that you get more money on the ones you're right, you get less money on the ones you're wrong, and your profit factor tends to go up from that. So those were my 3 swings. Let's look at the day trades that I took. First one was GEV. And I took this trade on the 23rd. So this was a nice post-earnings breakout. Really strong stock, breaking above this high, plus trend line here. A lot of heavy volume over there on the earnings. So this was a setup that I saw on the 23rd. And let me go back in time. Okay, so GEV. Let me zoom in a little bit here. Get this chart nice and orderly. Okay, so first of all, we can ignore this pink line at AVWAP-E. That was not set yet. It gets set after the day is over on that earnings candle. So we get this strong move up higher, and then we get a pullback to VWAP over here. VWAP's around 615. So I enter long 10 shares at 618 at around 1030. So I enter around here. Now, what's the market doing at 1030? Market's actually filled in the gap. It pushed up a little higher, and it was able to break above VWAP. So I really like this. I like this little dip in the stock that allowed me to get in, and I figured at least have a nice chance to push up higher, maybe test the high of the day. But honestly, I was taking this trade as a quick scalp. Like, I'm going to get in at 618, 10 shares, going to get out for, at 624 for a $60 win, and leave it at that. So GEV over here, I got a nice move, rallied to 624, so I got my fill on this candle about 10 minutes later. Really great entry point on this. Obviously, it had a move all the way up to 630, so I had maybe a $12 move here. And my stop on the position, you can see there's this low at 613, so stop maybe somewhere like 610-ish, so maybe an $8 move lower. But really nice trade, nice low win that I got going for the day. Um, and yeah, like I said, just nice little win. And it had another setup actually over here. It broke through this high minus trend line later in the day, so you have another setup over here. Call it 622. And you could probably ride that out for another $6. You can have a lower profit target maybe on this if you want, if it's not rallying super strong. But you have one over here, at 622. So that was GEV. Nice little win. My goal this week was to kind of go for just some hit and run base hits. So I would give up some upside gains, but I would just kind of get some smaller gains, get some wins, and get my confidence up. Oh, that's the wrong chart. But that was GEV. Next trade that I took was IONQ. I actually do like this stock. I should probably add this to tickers. I've been keeping a list of tickers that I like to trade price action wise, and I'm going to add this to it because I have traded this ticker a whole bunch of times, and I do pretty well on it. It tends to see this and Rocket Lab. They sort of will compress, and then all of a sudden they'll just explode up. So I don't know. Just after seeing this, I have a little bit of a feel for how it can move. So IONQ, let's go back to this D1 chart. I got a little bit ahead of myself here. So this was the day on the 24th where I took it. You can see on D1 wise, it's not super impressive. There's not any major breakout here. Volume was okay. It wasn't great. It was maybe about, a little bit below average for the day. I think a little bit average as I took it in the trade. But we have some nice bounce off support. We're above, got through that 8 EMA, and we had a little bit of room to this resistance point over here. This high of 44.54. So kind of just testing that little level here on IONQ. So here's the setup D1, and this is on the 24th. You can see that market dead day, right? It's just going. Pretty much just went nowhere the whole day. IONQ did gap down, and then it rallied up here to test this high, came back down, and then it found some support over here, and then we got a nice green pop on this candle at 12.35. So that's where I really like the trade. So now I bid for this stock lower. I bid at 44.10, which is the halfway point of this long green candle, and I got filled on a pullback on this next part, which is already great. So instead of chasing at 44.23, I got what did it close at? 44.22. So instead of chasing at 44.22, I got 12 cents of, lower risk and higher reward for bidding better. Actually, I already came down to 44 cents. So it was a little better, but you can't get a perfect bid every time. You can bid at the 8 EMA if you want, but halfway points of the candles are pretty nice entry points. Now, over here, my plan was, again, another hit and run trade. 44.10. I'm long 200 shares, so if I get in at $44.40, I'll take some profit. So I hit that point. I took half off over here, and then I'm watching the trade. Stock was a little bit choppy, so I took another quarter off at 44.33. I hit this. There was a kind of a high volume bearish hammer, so I got filled here. I waited and watched the hammer close, and then I took some gains at 44.37, and then I set an OCO where I was like, all right, if it hits the high of the day, I'm going to take the remaining gains at 44.50. And then if this goes against me, then I'll scratch out of the trade at 44.11 for a 1 cent gain. So to reiterate, I was long 200 shares at 44.10. Stock rallied up higher, hit my profit target, took half off at 44.40, took another quarter off when this hammer became a bearish hammer, high volume bearish hammer, and then set an OCO to manage the remaining position, which I got scratched out of. So overall, ended with a small win on that trade, smaller than if I'd normally set to a hit and run target. But generally, sometimes scaling out can work on this. I feel like it was an awkward trade in terms of exiting because my rule was just to get in and get out. But I felt that, hey, this has a chance to push up higher. And, it's kind of hard to say, okay, maybe I should have stayed with my rule. But on the other case, well, it seemed like the right idea at the time. But I think I managed it well considering that I didn't stick with my hit and run rule. If we look at what SPY did at that time, so here's a 12.35 and then the 12.40 candle, whereas the 12, so market had rallied down here, found some support at the low of the day and started to rally. So I took it over here, and my thesis was that this low of the day needs to hold, and this has to be a higher low, and we have to rally up higher. If that doesn't happen, then I'm going to get out of the trade, right? And I have some support here at 44.37, but I also have support at VWAP. So if it breaks that support at VWAP, maybe comes in at 43.20, I have to be okay with taking that loss. All right, so that was IONQ. Next trade that I took was Oklo on the 24th as well. So let's go to this day over here. Oklo was breaking out of some major. This is some major D1 resistance on the chart. Let me just whip up that chart. Yeah, so had broken above this high, broken through this high minus trend line. There's a really nice entry point on Oklo here, right? It rallied up higher. You got a nice little better bid the prior day. You could probably get in at maybe $60 over here, and you can definitely get a nice, nice $10 gain on that, even $15 gain on that if you wanted to hold a little bit longer. All right, so that's the D1 chart on Oklo. This chart over here, stock had broken through this high plus trend line, bouncing off VWAP here at 12.55. I got a better bid at 74.30, which was kind of the upper third of this candle, around the 8 EMA is where I got filled on this bearish candle. I didn't get filled here, I didn't get filled here, but I did get filled here. And then stock didn't really do anything for a couple of minutes, and I got filled at 115. So you can see here that the market was actually starting to pull back a little bit after this big rally. And Oklo was nice. It was bouncing nice here, but then it didn't quite participate in this rally after that. So see, it bounced, actually broke up early here at 12.55, but then it didn't rally with this nice move here. Just kind of got stuck to the ground. So I got in here. I wanted to see this move start to continue up pretty fast, and then it didn't. So because of that, I decided to, I scratched out of the trade here at 74.13. It looks like scratched out of the trade for a very tiny, for basically like a $5 loss. So really, really small loss here. Came back to test this low, made a higher low, and did end up actually rallying to a new high of the day. So I needed to give this trade a little bit more time. But even as a hit and run, I was looking for maybe like $1 on this trade. I was day trade long, 30 shares. So I needed $2 on this trade, which was a move right under the high of the day or to the high of the day, which I would have hit, had I stuck with it. But yeah, scratched out of the trade here at 130 because the market was starting to pull back here. We also had a double top on SPY. So I was like, all right, we see some two-sided price action. This could go against me. I'm fine with waiting on the sidelines and see kind of what happens later. And then the stock kind of slowly gradual higher and then accelerated towards the end of the day over here for some nice gains. Okay. So that was Oklo as a scratch. And then the last trade that I took was GEV, which I took again. So on the D1 chart, stock had a big move up, and then it was compressing for pretty much like 2 days. So here's the D1 chart, again, super strong. If I look at this M30 chart, it's a little more telltale. You can see that we had pretty much the main chunk of the move in the first 90 minutes, and then we spent the rest of that day and the rest of the next day compressing, and then it broke through this high minus trend line / compression high on the first candle of the of today on Friday. So there was actually an entry there. I saw it. I didn't take it because I wasn't comfortable with taking it. It's just really early entry, but it was a nice entry. Closed at 136.20. You could get a nice better bid at 135 or even 134 if you were like really opening to play that kind of dip. But I wouldn't have been as aggressive because these moves can sort of take off early in the day. So there's a nice, actually aggressive advanced trade over here. I waited for the pullback to VWAP, so we got this test here. We got another test higher low, and then the stock again broke through this high minus trend line, a nice long green candle. Okay, I'm gonna bid better. So I bid at it closed over here at 648.71. I was bidding at 647, which was again about the halfway point of this bar. Got filled on this 1240 candle. We got a pullback to VWAP. We're holding this level here, and then we start to break through this level on the downside, and then we confirm that break over here at 130. So I took my lumps at 641.40 on this break of the low of the day. So took a loss on that. I was long 20 shares at 647, so ended up being about $100 loss in that stock. But it was interesting because that was the trade I actually felt the most confident in. It was a good setup. I took the setup. It just didn't pan out. You can see that oftentimes when we get this break, there's a test of VWAP over here. And then the market tailwind that was so strong actually ended up keeping the stock afloat for the chance of maybe a better exit. But, took the loss when I did. It was a clear-cut rule. Broke through here. Clean candle here on heavy volume. So I could risk the move back to VWAP. And then on this move here, right, the candle has to break through immediately or getting out of the trade. So you can probably get out at 644 or maybe 643.80. So you can take maybe a smaller loss here, which is one thing you could have done. But took the loss there, but still ended the week green. But I was just glad I kind of took my setup as I did. And if you look at what happened at 12:30, right? So market, I took it because on this 12:30 candle, market has a bearish hammer here, and this stock is actually rallying on a nice green hammer, which tells me that there's some strength coming into this guy. And I got the market right on this 12:30 bar. So I got the market right, and it's moving up higher, but stock is just not really producing. And I think this move was just a little bit too strong, too much gains to digest over here. I still think it has a chance for another leg up higher, but I'm taking it as a day trade and not a swing trade. So those were my day trades. In terms of open trades, I have two. First one is MS. So, shout out to Isidore. Thank you for putting this on my radar. Finance had some strong stocks. He was over GS earlier this week. Took a nice win on that when it broke through this high minus trend line over here. And we got a nice poke, and he took some gains over here. I like GS. I was bidding lower on that. I didn't get filled. I was bidding like maybe 710 or 712. Just couldn't quite get that fill on GS. So missed that one, but sometimes it happens. On MS though, again, strong sector. I'd also, by the way, taken gains on Wells Fargo. So I liked MS for a couple of reasons. One, we're getting through this high minus trend line. That, as he had pointed out, we had filled in this gap. We had a nice rally post earnings. So there's some strength in here. And also that finance is going to be a little bit more market agnostic to some of the tech reporting going on. So we're through a lot of the financial earnings. I don't have to worry about peer earnings. And look, if the market goes down, then, I take the hit. But if, I don't have to worry about taking, if I'm long a tech stock, for example, right? I may have to worry a lot more about what Meta or Apple or Amazon or Microsoft are going to report because they're going to weigh in on that sector. So I have some protection, and that's a big reason why I chose the stock. Now, I'm long MS. Let me see what I put in here. I believe it's the October 8th. Yes, October 8th, 138 calls for 560. So 138 puts me pretty deep in the money. I took it 2 weeks out because I felt that, the trades have been pretty short term. The vast majority of my trades are within 3 days. And the ones that do end up being longer, there's one that was 6 days, one that was maybe 8 days, which is not including a put credit spread. So I have a pretty good chance of hitting my, reaching my target as long as this tailwind persists in the next week. You can see that we broke through this trend line here. We kind of got rejected off it. I'm going to actually draw that a little bit differently here. There we go. So yeah, we closed right around it on the 24th, and we closed above it here on the 25th. Volume has been okay, not super high, but the tailwind, again, is bullish, and I'm getting a nice setup off a pretty nice bull flag on this guy, right? We got a nice flagpole here, weak choppy drift higher, and then we're starting to push up for that next leg. Now, because we haven't been pushing up super strong, I'm more inclined to take gains near the high at around 45. There's also this high volume candle here at 144. So I'm also going to see if we can crack through that pretty quickly, or if we tend to stall out over there as well. You can see the 144 is the high of this high volume candle as well. So a little bit of minor resistance there, but those are sort of my more passive target, and then a little more aggressive of a target. Now, given that we have some tech earnings tomorrow, the market has a decent run. It might pull back a little bit. I have sold the 146 call expiring next week for a 38-cent credit. And so I sold that for two reasons. So one, lowers my cost basis by about 7%. And two, if the stock pulls back and the market pulls back, I can take some profit gains on that short call and then ride the stock up over here to the high. If it explodes up super high, it reaches my profit target, right? I can take some gains on the whole position. And again, that time spread will erode it pretty quickly. So, yeah, I mean, I'm fine either way getting called away at my target, or if it goes against me, then I make a little bit of money. So I sell that only for the next week's spread, and only if I think, all right, well, there's some chance the market's going to pull back, especially after a nice little $10 run this week, and maybe going into earnings, we might see a little bit of risk reduction, which is the reason I sold that call. I'm going to go zoom into the entry a little bit on here. So on MS, let me zoom out. Okay, so as you can see, it was moving up higher, but it's a choppy stock, right? It's not really making big moves a whole ton. So after this super nice leg up, I was just bidding at VWAP, and I got filled over here around 250. So if I got in on this high over here, over here at 460, 375, my calls would have been worth about 620-ish, maybe 618. That's how much it was worth. And then, so I got a better price at 560. So I've already saved 60 cents from just a better price. Another 38 cents on the table from selling the calls that are most likely going to expire worthless, or if they do expire in the money, then I essentially just take profits on the whole position. So both of those combined is just $1 improvement on the whole trade from just not chasing and let it go against me. And now that the stock has come around, right, it's pretty much right around my entry price. So in terms of my stock position, I'm break even on the trade right now, versus still being down just because I waited for a nice little better bid. So again, sometimes you miss some trades, but I'm okay with missing some of those trades if that means I get to enter in at the price I want, and I feel pretty confident about sticking with that position. So that is MS. And then the final trade that I took is Bull. And I think someone had mentioned this in the chat, but they were doing a fig leaf or a poor man's covered call on Bull, which I really liked that idea. So I took the same one, and what I liked is I took where is this? So I took the January 16th, 2026 $10 calls for $6.67. So I'm paying about 70 cents a premium. I have this big floor here at $10, and if it breaks through that, then stock is gone. My max loss on this is about 2%. So it's a much longer duration, but even if this stock completely goes against me, I won't even take the max loss because I can just keep selling calls against my fig leaf to recover income. So I like this trade. I'm willing to hold it over earnings. I have about 6 months on this trade. Obviously, there is a massive runway to $77, $78. I'm not planning for it to get there, but there's a couple options that I've laid out in terms of Bull. So we have the first case, the stock goes up. Now in that case, the stock can make a massive parabolic move higher, in which case it hits my short call. I get called away, but the entire position is a profit and a win on the trade. Now, I think that's not super likely, but look, this is a big stock. It can happen. There could be some crazy news. It might just, move up like, I don't know, 100% in like a day or two. So if that happens, then hey, I'm cool with that. The second one is that the stock grinds up higher, but it doesn't go parabolic, which means I can keep selling calls when the stock makes new highs. I can keep selling out of the money calls, and then my in the money puts also increase in value as the stock goes up. So not only am I increasing on the main puts here, but I can keep sell calls and reduce the initial cost basis on the position. The second one is that the stock ends up just being flat. So in this case, as long as it's around my price target, I lose the premium on those, which is only about 70 cents, but I can keep selling calls against the position and harvest some of that premium. The next scenario is that Bull may test this support, but it holds. In this case, I'll lose my delta calls will go down, but again, I can still sell calls, recuperate that premium. And the worst case scenario is that bull just completely shits the bed, breaks through this all-time low at 954, and then just starts to sell off. In that case, calls are gone. Again, though, I can still sell some calls against it. So the fact that I can hold this for a super long time and sell calls against position gives me a whole bunch of leeway. So I've sold next week's calls. I've sold the $20 calls for a 36-cent premium, and that's pretty much 5% of my cost basis, which is what I'm trying to target about every week, which I think is about the 0.2 delta, not the 0.1, but the 0.2. So that means in about 20 weeks or 5 months, I would make back up the cost basis. Maybe a little bit less, maybe like 19 weeks because there's a little bit of rounding here. But about 5 months, or basically, by the end of the year, I have a free position on bull because I've reaped all of that cost premium over here on the position. So I really do like that about bull, and it's a pretty cheap stock. I'm not risking a lot over here, so I like that as a trade. It's not exactly a textbook trade, but I feel like there is a big amount of upside, and the risk on the downside is very low. That is the trade that I'm in. So I'm not gonna be talking about it. I'll be talking about it a little bit every week, but just obviously not a whole lot. But the plan is just evaluate the trade, keep selling calls that expire worthless, and then I have all the scenarios listed out, so just sort of manage the trade accordingly. I think the stock is going to be also a little bit more market agnostic, maybe more sensitive to some crypto news and some legislation surrounding that. Just keeping an eye on that. So those are all the trades that I took. Overall, another green week. I am 3 for 3 right now, so just keeping up the green weeks. Last thing I do want to finish on is that on my day trades, I've been kind of in and out on the confidence. So one thing that I've done is that on my chart, so I'm going to pull up 2 charts here. It's maybe a little bit messy, but on my chart, I've just noted all of the day trades that I saw and they looked good, right? Maybe there's the stock entry set up, but I didn't take the trade. There's also trades like something like this where, okay, this was a great trade, but I just didn't see it on that day and I saw it after the day was over. So, sometimes you're going to miss trades. It's not, you can't obviously catch all the trades. You don't need to catch all the trades. You just need to catch some of the trades and not take just not take dumb trades. And you'll do pretty well. So I made a list of all the trades I took. So here's the trade. Here's when I saw it and when I would have entered. Right, here was the price, and then here's the reason why I didn't enter the trade. So I just wrote all this down for every day, and I just counted up how many wins and misses or scratches, but ended up with about 10 wins. I know 5 trades that I missed overall, but a lot of nice wins on that. And then on those trades, I started marking some charts as to, okay, well, here's a trade that I saw, right? Here's a trade that I saw. Okay, well, I saw it here, didn't take it, and here's what the market was doing. I saw it here, didn't take it for X, and Y reason. So, what was this the right entry? What was the setup? Why did I skip it? Why should I have taken it? What was the risk reward like on the trade? And so just doing that already has given me a lot more confidence. And I think something that Dave was literally talking about this earlier today, and I just screenshotted this and I put it in over here because it's just about looking at charts, marking charts. And, when I did this, my day trading was super confident. It sort of fell off a little bit. I think I sort of still have this in me, but, a little bit rusty. So, just keep marking charts, keep annotating charts. I think I say it a lot, but it is really, really true. And you're just getting so many reps in the tank. You're keeping that skill sharp. And, something that I want to do a little bit more going forward. So, that's just a little side thing on the day trade. So I may play around with how I do that, but overall, I think there's never anything about the picks. It's just really about the confidence in taking the picks that fluctuates. That sometimes I need to get in, sometimes I need to build back. And the way I build back the confidence on these trades is I start just marking down all the trades I would have taken and I don't take, and that lets me say, hey, okay, well, actually, all the trades I'm picking are pretty good, but I just don't have the confidence to actually follow through on the trades, which is the mental side of it. Now, if I mark all those trades and they were 8 losers and 2 losses, 8 losers and 2 wins, then it's like, all right, well, you just have bad picks. You need to reevaluate, what you were thinking, your radar, right? Your sense of what is a good trade is off, right? Maybe you're out of sync with the market or something for some reason. So first thing I do is, again, mark down all the trades I would have taken but don't take. I just make a list of that. That builds me some confidence. I take some more trades with better confidence, and I start marking down some more charts. And then after a week or two, I kind of get my mojo back. So I've been to the ringer before, and I think it's a matter of just, I do it for a while and then I stop because I feel like, all right, well, I feel like I've internalized it, so I don't have to keep doing it, right? But it always ends up falling through. It's kind of interesting now that I realize you sort of have to just keep at it. And like Dave said, he sees hundreds of charts every day, and that keeps him sharp and keeps him fresh. So that just might be something that I have to do as well. But yeah, I mean, look, maybe I'll make another video on this if people are struggling about winning back confidence and understanding how they take confidence. But this is what I do personally, and it works pretty well. So I thought I'd share that at the end of the video. But that is it for today. So again, those were all the trades I took. I am long bull. I am long MS. MS is the normal trade. Bull is a fig leaf. And we got a lot of pending news next week, so should be some fun trades. We'll also finish out the month so I can see how I'm doing for July, if I'm on track or not, and what how I'm doing relative to the goals I set for myself. Thanks for watching, everyone, and I will catch you all in the next week's video.